Now, the last speaker in this session is Janis Kluge from the German Institute for International and Security Affairs, SVP, in Berlin. He, in this role, consults with the German government and the Bundestag in foreign policy matters. His research focuses on Russia's economic relations and development, on its domestic policy, and also on the sanctions. He holds a PhD in economics from Witten-Herdecke University and was a doctoral fellow at the Center for East European and International Studies. He has published in New Political Economy and Comparative Economic Studies on the Russian shadow economy and Russian elites' response to foreign direct investment. His contribution to the Russian Equal Project focuses on how Russia's foreign policy affects the behavior and international linkages of business elites. So please, Janis, the floor is yours.
Thank you very much for the extensive introduction and the warm welcome. Thank you very much. Thanks to the host. I'm very glad to be here today and discuss with this excellent group of scholars. So maybe just one remark. Before, and as you heard, I'm an economist. So as an economist, of course, I like charts. And so my presentation mainly consists of charts. Now you're prepared, and I hope it will not bore you too much. The topic, though, is quite an interesting one, and it has a lot to do with some recent shifts in Russia's foreign policy over the last years. So, of course, a lot has been going on there, but one particular trend which is important is the increasing significance of China for Russia. And this has been going on already for many years, actually not just for the last few years, but especially since the Crimea annexation and the imposition of sanctions on Russia, there has been much more political will on the side of the Russian leadership to deepen this cooperation with China. And it has been successful on many levels, actually. One which is standing out is the cooperation in the military. So there we have seen some progress, especially in the last year, which has surprised many experts. But today I will speak about a different area, which is economic cooperation, which is an important and a crucial area for Chinese-Russian cooperation, but one that has shown so far rather ambiguous results. This is what my presentation will be on. It will have more of a macroeconomic perspective. And when we speak about Sino-Russian economic relations in the West, we often have in the West a very polarized debate. So on the one hand, we have those who say, there's nothing really going on, and everything fails that these two countries try to do together. And on the other side, we have these very alarmist perspectives, saying that, okay, with our sanctions, we're driving Russia into China's arms, and Russia will be dependent on China, and this can't be in our interest. So this is maybe a position that Emmanuel Macron sort of formulated in the summer. So I think the analytical challenge with this relationship is actually to take serious what is working out and what's actually happening, while keeping a sober look on all the handshakes and announcements and memorandums of understanding that are very strongly publicized by the Russian leadership especially. So and the main question that I would like to answer with the presentation is what has been achieved over the last years, what are the key drivers for this economic cooperation, and then also the question of asymmetry and dependency is always in there as well. And to do that, I will go through some basic patterns of trade over the last years in investment and focus then on the special issue of de-dollarization in the bilateral trade. And in the second part of the presentation, highlight some obstacles that there are to this cooperation, namely sanctions, Russia's own conflicting economic policies, and the high personalization of Sino-Russian relations overall. So I will start with a glance on trade. You can see here the development of trade basically over the last 20 years until 2018. And there are, you can see on the top, the Russian exports to China. On the bottom, you can see the Russian imports from China. This is nominal in $1 billion US. And what you can see is basically three things. First, there has been a drastic increase in trade over the last 2 decades. The second insight is that this increase and the fluctuations that you can see on this graph are mainly dependent on economic factors and not on political factors so much. So you can see, for example, of course, in 2009 we had the financial crisis and the oil price dropped, and you can see this in the diagram. And also after 2015, I marked Crimea as a political event, but you can see after that, especially because of the low oil prices, the struggling Russian economy, and the devaluation of the ruble, that first trade really contracted. And the third thing that you can see is that over the last years, you had year after year actually new record highs, and this is quite celebrated also by the Russian leadership in this bilateral trade. Also 2019 was a new record high. So this is in absolute terms, but if you look in relative terms, we can see that these records really depends on the perspective. And this is what we do next. On the left side, you can see the Russian perspective on bilateral trade. On the right, you can see the Chinese perspective. On the Russian side, you can see that China, especially on imports, which you see on the bottom, is now a really important partner with more than 20% dependency, with exports a bit more than 10%. On the other hand, if you look from China's side, you see that the significance of Russia for the foreign trade has not changed at all from the 1990s until 2018. Maybe a little bit more, but it's still about 2 or 2.5%. So it's really a very one-sided deepening in these economic relations which is going on. Now I would like to turn to the question, what kind of goods are actually traded back and forth, because there's also an interesting development that's been going on over the last years. This is on the next chart. You can see on the top Russia's exports, and the bottom Russia's imports from China. And you can actually see, I don't know if it's visible here, but that the patterns of exports and imports that basically flipped. So if you look back in the 1990s, Russia was actually exporting high value-added goods to China, for example, machinery. And it was importing really low value-added goods such as cheap textiles, furs, shoes, and some cheap consumer goods. And this actually switched gradually over the next years, and especially after 2010, a new pipeline was built and opened for oil export. You can see the minerals, which is mostly oil at this point, really expanded, while China turned from exporting low value-added goods to high value-added goods such as machinery, electronics. And this reflects Russia's, of course, technological rise, and China's technological rise, and Russia's economic and technological stagnation throughout this time. So you can see that this deepening, or this maybe one-sided dependency, is not only with regards to the volume of the trade, but also with regards to the structure and the goods that are traded. So one maybe information, the agriculture bar, which is also sort of increasing right now, is mainly timber and fish, what Russia is exporting at the moment to China. So what does this mean for dependency? Maybe you can also maybe already draw a bottom line. At this point, you can say that as I said, it increased. But from the perspective of the Russian elites, this might be more perceived as a diversification, because an economy like Russia's will always be dependent on some outside economies. At the moment, it is hugely dependent on Western economies. And especially since the imposition of the sanctions, this interdependency with the West is seen as a threat, as a risk. And so I think that from the perspective of the Russian elites, more dependency from China, if you trade this and diversify, it's actually nothing that they are worried about so much at this point. So how will trade develop in the next years? There was an announcement last September by the former Prime Minister Medvedev and Li Keqiang, the Prime Minister of China. They wanted to double trade basically over the next years. It's quite questionable if this is going to be achieved. The most notable changes are going to be the increasing role of natural gas. We heard already about the LNG terminals. They are slowly ramping up, and they're exporting also to China. And then you probably also saw the opening of the Power of Siberia pipeline, which will bring pipeline gas to China, and this will also ramp up over the next years. It's not a very quick process, but until 2025 should reach its capacity. If both of these developments appear according to plan, you will see that natural gas will play about the same role as agriculture at the moment. So it will not surpass oil in any case. Oil is still dominant, but it will play its own role. Then there will be a bit more agriculture export. You can already see that China's opening up its markets for Russian meat exports. And finally, you can actually see an increase in Chinese tourism to Russia. So there's a services trade. This is a quite explosive development that you can really see in the Russian capital, especially. But if you look at the statistics, actually, it's just 1%. About the trade turnover, around 1 billion per year is what Chinese spend in Russia. So this is as a bottom line to the developments in trade. Now turning to the developments in investment, and maybe investment is the one area where the Western sanctions, of course, hurt the most. And it's the one area where the most hopes connected to China, and also, I would say, at this point, the most disappointments. First of all, one has to say that it is extremely difficult to really tell precisely how much Chinese investment there is in Russia today. So I tried to compile statistics from the central bank, Russian central bank, and the Ministry of Commerce in China. I will just quickly go over it. You can see the FDI flows, the annual flows in the top. You can see that it's around 1 billion, 2 billion per year, depending on if you look at the Ministry of Commerce in red or the central bank's data in blue. And then you can look at the accumulated FDI stocks, foreign direct investment stocks. You can also see a difference between Ministry of Commerce. They say about 14 billion in 2018. The Central Bank of Russia says about 3.6 billion. This huge discrepancy comes about because investment into Russia is mostly flowing through some international offshore financial centers such as Cyprus. Some of the biggest investments to Russia from China have gone through Cyprus, for example, and this massively distorts FDI statistics. The Ministry of Commerce tries to account for this a little bit. There are some projects that really try to actually count projects and get a more reliable figure through this. But still, they are looking at maybe 30, 35 billion of Chinese investment over the last years. Still, if you take all that and take the largest numbers, it's really still a very small number. For example, from the Chinese perspective, this outgoing investment to Russia is 0.7% of the total outgoing investment from China abroad, including Hong Kong. If you look at the Russian incoming foreign direct investment, this is about 1% of the incoming investment to Russia. And a country, for example, like Germany, invests 5 times as much in Russia today as China does. So, as I said, you have to consider that this is very difficult to get this kind of data, but you can already see that not very much has happened at this point. And you can also see, if you look at the projects, that it's about 2/3 is focused on energy projects. It's mostly from Chinese state companies, because for Chinese private companies, it's very risky to invest in Russia. And it's mostly focused on companies which have, through their executives, some closer ties to the Russian president, Vladimir Putin, which is also some sort of risk hedging probably, but also some exchange of favors between the Chinese leadership and the Russian leadership, possibly. So why is this the case? Why has there been so little investment in Russia? The answer is actually quite easy. It's that Chinese firms face exactly the same hurdles and the same difficulties and the same problems in Russia that also Western firms face when they invest there. So you have the same bureaucracy, the hurdles, you have the very difficult economic circumstances, economic stagnation, so the market might not be that interesting at the moment. And also you have just very little experience from Chinese actors and Russian actors with each other. So this is kind of, which is at the moment, limiting investment of Chinese companies in Russia by a lot. So I quickly want to turn to the third issue where there's a bit more progress, and this is the question of de-dollarization. So it is the common goal of Russia and China to limit the role of the US dollar in the world economy, but particularly in their bilateral trade. All trade that is settled in US dollars is more susceptible to sanctions, and also it's the goal of these two countries to push their own currencies, the ruble and the yuan, for foreign trade. Now the developments here have been quite sudden and quite interesting. If you compare 2014 to 2019, you can actually see that with regards to Russian exports, it used to be 99% settled in US dollars. And at the moment, you have less than half is in US dollars and more than half is actually in euros, which is kind of surprising at first. You have a little, small percentage in yuan, a small percentage in ruble. So it turned out that the euro was the most convenient currency for both the Chinese and the Russian companies, which was not the US dollar. This is why they chose it, and because it's such a drastic development and so quick, the only possible explanation for this is that it's connected to the state companies and probably Rosneft's oil exports to China, which have been switched from dollar to euro settlements. If you look at the Russian imports from China, you can see that the development is much more gradual. And here you can see that the US dollar in blue on the bottom is also losing from about 95 to maybe 67%. But the main beneficiary in this case is the yuan. So in this case, China actually manages to impose its currency policy on the bilateral trade between Russia and China. To conclude my presentation, I would just like to quickly go over some of the main obstacles at the moment, which are still there between Russian and Chinese economic relations. And the first one is maybe counterintuitive because it's the Western sanctions and the trade conflict of the United States and China. So, you maybe could say that the Western sanctions are an incentive for Russian firms to turn to China, but in fact, it makes it much more difficult for Russian firms to engage with Chinese partners. For example, Chinese banks are very reluctant to do business with Russian firms because of sanctions risk, and they are very much afraid of reaching sanctions. So they are very strict in carrying out US and EU sanctions against Russia. Then the trade conflict. Again, you could say that Russia might benefit from this because it could export LNG or agriculture goods to China. But actually, Russian exports suffer from the trade conflict because it slows down Chinese economic growth, and it lowers the demand for the most important export good, which is oil. And also it makes the Chinese leadership much more careful in what they do with Russia because they don't want to aggravate this conflict with the United States. Then the second obstacle is that Russia has very conflicting economic policies, and this economic turn to the east is not the only one. There's another one, which is the turn to itself. So, this policies that are aimed at, making the economy more sovereign, making it more national, import substitution, and erecting some different sorts of trade barriers and protectionism. This is probably a more dominant economic policy at the moment in Russia than this turn to the east, and Chinese-Russian economic relations also suffer from this. And the third problem, or maybe risk for the future, is the high personalization of the economic relation between both countries. And much has been said about the political regimes in Russia and in China becoming more personalized over the last years. And this is also true about this Xi and Putin relationship. Much has been written about this. You probably cannot take everything at face value, but it's clear that this facilitates some parts of the deals that are made. But this is not only in the top level, also in the below. You already heard about the energy companies. If you have the key executives that are responsible for the increasing trade with China, they are extremely powerful within Russia and mainly controlled, by the president personally and not by the Russian institutions. So the problem why this is a risk is that whenever there's going to be a change, and on the Chinese side it has happened, maybe you can go to this in the discussion, these personal connections, they can fall apart. And at the moment, it is just very difficult to imagine Sino-Russian cooperation to continue like it says, developed in the last years with a different president or without Vladimir Putin. It's just at the moment, because of this high personalization of these relations and the networks which are engaged with China, it is very difficult to imagine. So wrapping up, what you can see is that you have a gradual deepening in relations coming, especially if the sanctions pressure is eased. That would actually help Sino-Russian relations. You see that Russia becomes, with regards to its economy, more diversified internationally. And finally, you can also see, though, that Russia is becoming less diversified with regards to its own economy. So you see that with China also, oil and gas, again, is the one sector which is dominating. I will wrap up with this, and thank you very much for your attention.